I'm Sonal Bhutra and with me is Ekta Batra. Hi Ekta, good afternoon. Well, another day of green on the screen. It's a 60-point uptick on the Nifty. We have of course fallen from the opening highs, but still the green momentum continues. It's the mid-cap side of things which are just really doing well. So mid-cap index is up 0.7% this week so far. It's been 4 days and that index is up around 2% with the advance decline ratio comfortably in favor of advances. So commentary coming in from Powell. We saw Eurozone inflation lower than what was expected. All these cues together definitely exciting the markets today, and that's the reason why we are seeing green across the screen. IT of course is the one that has taken a lead today, so let's see whether we continue this momentum or not. For now we are in the green.
Yes, Sonal, hi. Well, indefinitely. And we do have the Ashok Leyland numbers which are flashing on your screen as well. So more macro data in terms of high frequency indicators which are in fact to work with today. So MHCV sales are up 69% on a year-on-year basis. Overall, the number to look at is that our overall poll was 13,900 and Ashok Leyland has delivered better than that. They've come in at around 14,561. Our poll was 13,600. So it's definitely a beat as compared to what our expectations were. We'll get down to more nitty-gritties with regards to the Ashok Leyland numbers, but as you can see, there's a little bit of an uptick that you've seen for the stock, up around 0.8% at this point in time. But just talking about the markets and the overall sentiment, like Sonal mentioned, it is really courtesy the US Fed and what they said in terms of the statement last evening. Powell says that there is a smaller interest rate increase which is likely ahead, and that smaller interest rate increase could probably start just in the month of December. Now remember, the US Fed has already hiked 4 times, 75 basis points consecutively, and this pace of rate hikes, as we all know and have been reporting, has been the most aggressive since the 1980s. But remember, inflation has been at those levels as well. But nonetheless, in terms of a calendar to watch out for, we have the CPI data from the US, which is on the 13th of December. Remember, this is for the month of November. For the month of October, it had already come down to around 7.7% levels. So let's see what it reports this time round. And the Fed meet, surprisingly, is on December 13th and 14th. So they literally have 1 day to work with in terms of the CPI data. And the hike estimate is now around 0.5%. But let's move on then and concentrate on our markets. The Kirit Parikh panel bats for liberalization of the gas sector by 2027. Until then, a reduction in the price with annual escalations for gas from existing fields. Sonal's been tracking this entire story since last afternoon. Sonal, tell us more.
Well, yes, it's a big positive because there's a floor and a cap to gas prices now as per the recommendations, of course. So overall positive brokerage commentary coming in as well, because it will reduce costs for city gas distribution companies while keeping in check the production for oil producing companies as well. Morgan Stanley says it is a part to gas liberalization now. India's gas price liberalization proposals will be positive for upstream companies like Oil India and ONGC. And this is positive for both earnings as well as multiples, which were suppressed in last couple of years for these oil and gas stocks. CLSA says it is positive for both the segments, be the upstream like ONGC and Oil India, or be it the downstream gas companies like IGL, MGL and Gujarat Gas. And of course, Cabinet needs to take this final decision now. IGL told us maybe it will be a month before these recommendations actually are approved. This would mean a cut in prices of gas from the current $8.6 per MMBTU to $6.5 per MMBTU, and it should be positive despite that for ONGC and Oil India, because the valuations right now are factoring in $2 per MMBTU of gas realization. So there is a further upside here, and their cost of production also is lower than $4 per MMBTU, which is the floor price. Such a cut in gas price may raise discount of CNG to diesel by 30 to 40% because demand was getting impacted because of consecutive rise in CNG prices. So that would bring it down as well. Citi says that if these recommendations are accepted, it will be a significant positive, and it would bring down the input cost of API and gas by $2.1 per MMBTU, and they have a potential to reverse the years of underperformance that this particular sector has seen. IGL and GSPL are preferred gas picks, followed by MGL and Gujarat Gas. That is the word coming in from Citi. In fact, we also spoke to IGL today, so let's listen in to Pawan Kumar, Director Commercial at the company, to assess the extent of the impact on the company after the panel recommendations.
The recommendation is that the input gas cost of APM gas should come down by around 24%. But if we see the RLNG and spot component also, For IGL, the net reduction will be around 18%. Currently, around 88 to 89% APM gas we are using for CNG and domestic PNG segment. The remaining around 12 to 13% we are buying from spot, or we are mixing from RLNG based on our long-term contracts. So the average cost of production, average input cost last month has been around $9.78 per MMBTU, which will reduce to 7.98, around 18%. It will come around $7.98 per MMBTU. The net reduction should be around 18%.
Okay, so that's on the entire gas space, but let's move on. One of the stocks which are buzzing in today's trading session is Shilpa Medicare. In fact, it is up around 7 to 8%. Now, the news on Shilpa Medicare is that one of their units, Unit 4, which is based in Telangana, has in fact received the Health Canada approval or go ahead from the regulatory approvals required to supply to the Canadian markets. Remember that Canada is a regulated market. It is considered to be close to being as stringent as the US, and they generally go hand in hand when it comes to any kind of regulatory decision. Now, why is this important? Is because they do not supply to Canada as yet, and hence this will open the doors for them to for a commercial distribution as well as supply to the Canadian markets. And more importantly, this particular plant has already got US FDA issues on it. So, for example, in Feb 2020, they were issued a warning letter by the US drug regulator for this same unit, and that was escalated to an import alert in Feb of 2021. Now, because Health Canada has given the go-ahead, the hope is that maybe the US drug regulator could also probably ease up when it looks at this particular facility, and maybe remediation is in place. So that's largely the reason why you're seeing the stock higher by around 8%. US is a more lucrative market, but the fact that Canada has given its go-ahead should probably aid in terms of sentiment. In fact, we do have a discussion lined up.
On just that, right? Yes. So before we get into that discussion, for now, we'll slip into a break. And as promised, on the other side, we'll put focus on the Indian pharma industry's track record with US FDA, and we'll connect with Bino Patiparampil of Incred. Welcome back. You're tuned into Halftime Report on CNBC-TV18. And as promised, let's focus on the Indian pharma industry's track record with US FDA. Largely, it has been a disappointing year for Indian pharma companies when it comes to their inspection by US regulatory body. Ekta gets us all the details on this. Ekta, take it away.
It's been a very active and, might I say, largely disappointing year for the Indian pharma companies when it comes to inspections by the US drug regulator. First, a quick recap. India has over 650 US FDA compliant plants, the largest number outside of the US. After a hiatus of around 2 years due to COVID-19, the US drug regulator picked up the pace of physical re-inspections of plants in around Feb this year. The drug regulator hence had a backlog of plants that either needed routine inspections, those with outstanding issues where remediation was complete, and inspections which were related to new drug approvals. The outcome, it seems, has been patchy. Now, many of the companies, for example, could not successfully resolve issues that already existed. For instance, companies which had been issued an official action indicated status earlier, which essentially means the US drug regulator can withhold approvals from the plant. Either saw them continue or even escalate. Examples include Sun Pharma's Halol plant in Gujarat, which was issued an official action status in March 2020, continued to be classified with an OAI status after it was re-inspected in May 2022 and issued 10 observations. Similarly, Cipla's Goa facility too was categorized as an OAI in Feb 20 and issued a warning letter, was re-inspected this year, issued 6 observations, of which 3 were in fact repeats from the earlier inspection, and continued to be categorized as an OAI by the US drug regulator. Some examples of an escalation include Glenmark's Budhi plant, which was issued a warning letter in October 2019, re-inspected and issued 7 observations this year, only for it to be issued an import alert by the US drug regulator, which means the drugs produced by the plant were not compliant with US standards. Similarly, other escalations included Lupin's Tarapur plant, Glenmark's Goa plant, and Aurobindo's Unit 1, all which already had an OAI and were eventually issued a warning letter after a re-inspection. Another example is Aurobindo's Unit 9, which had an OAI issue 10 observations, or Lupin's Mandideep plant, which had a warning letter issued to it in 2019, was re-inspected and issued a total of 16 observations. Now, while there have been some successes such as Zydus's Moraya facility, Lupin's Goa and Somerset plants, Alembic's injectable plant, all with pending US FDA issues being successfully resolved, there is some concern on why many plants are facing a tough time. Analysts point out that it could be due to the fact that the long hiatus resulted in a gap between what the US drug regulator now wants and the remediation undertaken by the companies. Hence, the standards of what is now required might have changed. Many of the stock reactions are now quite benign when it comes to US drug issues. Reason being, a large part of the negative news might be factored in, and investors believe that companies have other growth levers and can tackle the issues eventually. For example, Sun Pharma has a strong specialty business which would compensate any loss, and Cipla has said that they are looking at transferring key products filed from Goa to other plants. But one must be aware that US FDA issues do impact business. Remediation impacts costs and drug approvals slow down. Case in point would be Biocon's biosimilar approvals held up due to issues at their Bangalore and Malaysia facilities, and the likes of Torrent, despite a strong India business, seeing a dip in the US due to 2 of their facilities being under the regulatory lens.
Ekta, thank you so much for bringing us that summary and telling us what's really happening in the pharma industry as far as US FDA issues are concerned. So let's take this conversation forward. We have with us Binu Patiparampil, who's the Director of Research in Incred Capital, to analyze what's happening in the industry and how bad of an impact could it have on pharma stocks as well. Binu, good afternoon. Thanks a lot for joining us. Well, you heard Ekta talking about what kind of US FDA issues these listed companies are facing. What kind of an impact do you see here? And what do you think is the reason why we have been seeing these negative outcomes from US FDA inspections?
Sure. Hi, good afternoon. So we need to look at US FDA compliance, good manufacturing practices compliance as an ongoing process. So it is not that a plant once becomes compliant and stays forever. There are periodic inspections, periodic change in processes, systems, new additions, deletions, the manufacturing practices, practice standards can themselves change. So US FDA compliance is an ongoing process. And this process was kind of disturbed during the 2 years of the pandemic lockdown, which probably resulted in a break in that continuous compliance process. So I certainly believe that this break has contributed to a lot of companies again getting observations post previous compliance issues. But at the same time, you need to keep in mind that there are companies which are coming out of that as well. So it is a continuous learning curve which these companies are going through, and as we go ahead, these issues will get resolved over the next few quarters. Having said that, I would also like to bring to your attention that as far as the larger companies are concerned, say Sun, Lupin, Cipla, Dr. Reddy's, etc., they have a very diversified portfolio with multiple manufacturing sites across the globe, to the extent that these US FDA actions are not impacting their businesses to a great extent. Of course, as long as there is no import alert, and so far we have not seen any big import alert for these companies. So it is a process by which some plants will have some compliance issues which will get resolved, but the growth will be driven by products from the other plants.
Sure.
We need to look at this as a continuous process.
Okay, but Binu, there are many plants which have continuous issues since now 2018 to 2020. Plants where the official action indicated has not been able to be resolved successfully post a re-inspection in 2022, as well as some plants where there's been an escalation as well, maybe to a warning letter and maybe one to an import alert as well. From that context, what do you think has been the slip between the cup and the lip?
So like I mentioned, the process improvement in these plans is a continuous process. Certainly, as you mentioned as well, the 2 years of gap that happened during the COVID pandemic lockdown has certainly impacted that process, which needs to now get back on track, which I'm sure is happening given the speed at which US FDA is also conducting inspections and the companies are responding. So in a few quarters' time, I expect the whole process to be back on track and the companies getting back into compliance.
Okay. Binu, as Ekta was also mentioning, that stock price reaction to these US FDA outcomes has been quite benign. And you mentioned some big companies like Sun Pharma also having some other portfolios. So do you think the impact of these US FDA outcomes, the negative outcomes, so to say, would not be much on these stocks, and the street is looking at something else which is fundamentally working for these companies?
Sure. So one reason is that what we already discussed, the large companies already have a diversified portfolio with multiple plants, so that FDA issues at one plant is not really affecting the numbers at an overall basis. But of course, I would qualify that as long as there is no import alert, which we haven't seen for any of the bigger companies. The second reason is that these are old issues, so to some extent, no new approvals from these US FDA impacted sites is already in the stock price. So continuation of that is not really impacting the expected numbers from the companies. And third, in very select cases, there could be an impact where there is a specific big product that the market is expecting. And if that particular product doesn't come because of an FDA issue, there could be issues. But as of now, we haven't seen any big impact so far. But if Cipla is not able to, launch Abraxane on time, there could be some impact to the stock price. At the same time, coming to the smaller companies, say Torrent, Ipca, etc., for them, the number of facilities are lower. But again, they have been impacted for quite some time, and the numbers from new approvals from these facilities have already been toned down significantly by the street. All this is resulting in the benign stock price reaction.
Okay, all right, Bino, we're going to let it go on that note. It's always a pleasure to discuss all of these pharmaceutical issues and a deep dive into the larger trends as well. Thank you very much for joining in and speaking with us. So that's the view coming in, that yes, compliance is largely an ongoing process, and let's see whether any of these big companies do see a delay when it comes to a couple of their key products. There was some news with regards to Easy Trip, so maybe that stock should come up for you. But as of now, we need to take a short break. Up next, technical, Sudeep Shah, of momentum in a couple of these metal stocks. So Hindalco is your top gainer on the Nifty, up around 3% odd. Tata Steel doing well, up around 1.5% as well. And IT is seeing a comeback today. So Tech M, for example, is up around 2.5% odd. TCS is up around 2.5% odd. Remember that the Nasdaq, in fact, gained considerably in US trade, and that sort of has followed through in today's trading session for us as well. But it is a weekly F&O expiry as well. Mangalam joins in to give us our daily dose of what's taking place there.
It is weekly options expiry indeed, and the way the markets moved higher every time those who wrote calls. Remember yesterday I was talking about that 18,650 call writers hoping for an 18,700 sort of zone on the market on the upside. That happened in yesterday's trading session itself, and we saw a lot of the 18,700 call writers actually unwind their positions. Now as we speak as well, nearly 27 lakh options on the 18,700 call have been unwound. 27 lakhs still remain for a premium of almost 160 odd rupees. And now bulls are aiming higher, and they are looking at the 18,800 put. That's the one which is extremely active, and which looks like, for today's trading session, at least that 18,750 to 18,800 is an important support, because they're looking to eat into that 18,800 put, the premium available out there, which is about 8-9 odd rupees right now. 18,850 call, however, is also seeing a fair amount of writing. So it's important to see whether the market goes ahead and sustains about 18,880 or not, or moves towards that 18,900 mark, because that's where people are hoping for, some sort of juice in the premium. The 18,850 call, for instance, right now has a premium of 30 odd rupees. So for those writing this, would make money if the market was to, hold around that 18,850 level and not go beyond 18,880. And to protect themselves, they perhaps bought that 18,900 level as well, because you never know what happens. Just the way yesterday in the last hour, we saw that big up move. So the trade is basically to sell the 18,850 call for 30 odd rupees and buy the 18,900 call for 11 rupees. You net a 20 rupee premium, you pocket it, and you protect yourself.
Okay, all right, Mangalam, thank you so much for making sense of the technicals of the market right now. So let's take this conversation ahead. Sudeep Shah, Head Technicals and Derivatives Research at SBI Securities, is joining us now. Sudeep, what do you make of the market today as far as technicals are concerned? 18,850 and higher than here. Is that a possibility, and what would that mean in terms of premiums?
Good afternoon, Sonal. What we are seeing is that post-opening, Nifty has been successfully able to defend this 18,800 mark and steadily inching higher. And in the last couple of hours, we have seen 18,800 put writers becoming more aggressive. So we feel that 18,780, 18,800 should ideally hold. And like yesterday, we can see a last hour rally up to 18,900 just to squeeze the 18,900 call writers. So our view for the day would be 18,780, 18,800 would act as a strong support, and upside up to 18,900 can be witnessed. And positionally, we can even inch up higher up to 19,000 in the next couple of sessions.
Okay, Sudeep, what would your picks be, and how would you also approach IT?
See, if we see the IT index itself now, last few days, we have seen NASDAQ showing tremendous strength. And apart from that, all the US indices have shown strength. So the global setup overall has been positive. If we see all the 11 sectors out of the S&P 500 had closed positive yesterday. So talking specifically about NASDAQ and the IT stocks, NASDAQ looks positive, and hence that positive spillover has come into the Indian IT stocks. And also large caps as well as mid caps are now outperforming the current move. So within the IT space, if we just specifically even talk about the index levels, there was a swing resistance which was around 30,400 created in August, and that has been successfully taken out today. And index is now headed up to 32,300 in the next few sessions. So we feel that till this support zone of 30,400, 30,500 on the IT index holds, there is a likelihood that we make a move on the higher levels around 32,300, 32,500. And with that, our top pick in the IT index would be TCS. Now, this stock is at a 7-month high, and it is sustaining about its 200 DMA for over 6-7 sessions now. Last couple of days, we have seen a good price action backed by volumes, and the prior swing resistance of 34.28, which was created in June, has also been taken out. So, and if we just have a look at a short-term basis, it has been forming a higher top, higher bottom formation in the past 4-5 weeks. So we feel that this stock can go up to 35.80, 3600 in the next few sessions, and can be bought with 34.20 stop loss.
Okay, all right. Thanks a lot for joining us, taking us through your technical picks and the outlook on other names as well. Now we'll slip into a short break. On the other side, we'll connect with Gulam Zia of Knight Frank. A lot is happening in the Mumbai real estate market, highest ever stamp duty collections, and also the Dharavi redevelopment. We'll discuss all of this with him after this short break. Let's put focus on the Mumbai real estate market. A lot is happening here. Property registrations in Mumbai this year so far have surpassed the last year's figures, and 2022 has emerged as the best year for the city in a decade for real estate registrations. Also, we have spoken about that big bid that has come in for Dharavi redevelopment project, and it has been given to Adani. So let's discuss this and more on the Mumbai's real estate market. Gulam Zia, Senior Executive Director at Knight Frank, is joining us now. Gulam, good afternoon. Thanks a lot for joining us. Well, before I speak to you about the big registration figure, I have to talk to you about the Dharavi redevelopment bid, which is won by Adani. It has been in talks for almost 2 decades. What is your outlook on this? What kind of hurdles do you see here, and how optimistic are we this time around about this big redevelopment project?
Well, Dharavi has its peculiarities. Let's understand, we always keep boasting about biggest slum in Mumbai, the world's biggest slum right over here. The problem is it is extremely dense a development. The kind of numbers of people staying there, and also it has its own commerce. It has huge business a lot of small scale industries operating from there. So there are a lot of those nuances which were to be taken care of before taking that step towards the development. And the biggest problem there was density, because you can't create a 100-story tower and put up a potter who's right now doing his pottery work over there on 70th floor and expect him to bring his pots down. Half of them could be broken. So a lot of those issues have always been tagging along with the development. That density thing was at last conclusively solved recently when the railways gave a large chunk of their land and have tied it up with Dharavi development. So now the density issue is sorted out. So going forward, when Adani is coming in now, I assume a lot of those issues are behind now. Only thing they need to be very careful about is the social fabric of this, the whole Dharavi settlement, where a lot of these issues do exist in terms of not just what I spoke about is how would you settle the businesses, but also nuances that it's actually a complete township in a small location. How do you manage the requirements or expectations of the people who are staying over there for decades is going to be the big challenge. If Adani can manage that, it's going to be a smooth sail for them.
Okay, exactly. Ghulam, it's probably going to be one of the largest redevelopment projects in the world. So yes, it is going to come with its problems when it comes to density and the rehabilitation process itself. But just give us a sense in terms of what the larger plan would be in terms of the redevelopment, according to you.
Look, I've been watching this project for almost about 15 years for various developers. We have advised them about it. To me, the biggest problem, as I said so far, was redevelopment of the existing people over there. Would you shift them elsewhere and then bring them back after 5-7 years? That's the biggest problem. Most of them who are staying over there will not be happy to relocate somewhere else. So in situ rehabilitation is required. The transit rehabilitation is the key. So here it is. If you have a large chunk of land, which as I said earlier, coming in from the railway side, you can make temporary tenements over there and shift the people who are staying over here in those temporary tenements, clean up the entire land of Dharavi where it exists today, develop all whatever business plan that you have accordingly, you develop them, and then bring these guys back and then you could get that land available for free sale component that you can make your money upon. So that complication remains. So that temporary tenement relocation was the big challenge, and the way I look at it, at least that challenge will be taken care of and you will be able to do in situ redevelopment right there, instead of shifting these guys over to some other location for 4-5 years. So that is a big stumbling block that I was looking at for last so many years. That behind, as I said earlier, possibilities of we seeing the whole turnaround of Dharavi is much brighter today.
Okay, so those are some positive aspects of this redevelopment. What about joint developments? Do you expect that is something that will happen for this particular project? Because Adani has bid around 5,000 crore rupees. The net worth that the authorities have put out would be around 20,000 crore rupees. It will require huge amount of investments here. Do you think companies like, Prestige Estates, there are a lot others who have been talking about interest in redevelopment as well. They'll all come together. There could be some sort of joint venture or joint development project here. You think that's a possibility as well?
Well, the scale of the free sale component, because that's where you will make money and, spend on creating redevelopment for the existing tenements. So the free sale component is the key for the success of this project. And that is going to be huge. And your success will completely be hinged on how soon you capitalize on that free sale asset, which means you will have to really develop it at an absolute fast pace. And then the possibility then emerges, as you're talking about, if you bring in other developers also to collaborate with you, and a couple of them coming together and creating this real estate piece together can make it much faster a process. So the possibilities of that happening exist. But then knowing Adani, their plans are ambitious, extremely big. They can, mop up resources, etc. So if they want to go all alone and develop that entire thing, and let's not forget, it actually abuts the most famous business CBD of India, which is Bandra complex. So Dharavi actually abuts it. So it's very, very prized and highly prestigious lands in close proximity to BKC, which will be opening up after Dharavi redevelopment. So whether you are going for JVJD or doing it all by yourself, it's ultimately Adani's call. And as I said, if you need quick cash, you need to really tie up with a few other people with maybe JVJD or
You know,
whatever
we're
the
just
mechanism.
running out of
But
time.
if you have the wherewithal, you may want to do it yourself.
We're running out of time, so we want to, you know, pack in more. And I think when we say pack in more, we want to talk about the Mumbai real estate market and the kind of interest that we've seen the entire year and in the month of November as well. One of the things which was debated was whether or not we are seeing, you know, a rise in the demand, in the prices of the properties as well, not only the demand. So how much have prices increased according to you? And what is the kind of demand that we're probably going to see going into next year? Is this kind of fervor going to continue?
To start with, let me just quickly say a word or two about the demand. And, about 4-5 months back, when the interest rates started shooting up, home loan interest I'm referring to, there were concerns that real estate may not be able to sustain this. And in fact, somewhere in September, we did see a record-breaking September transactions in Mumbai in spite of Shraddh Paksh in that period. So there were a lot of hopes that perhaps the buyers have taken in their stride the home loan increase, etc. happening. But then the Diwali period was a kind of, something which gave us concerns. October didn't see that good a movement. But November, we are back with a bang. About 15% rise, not just over September, but 15% rise almost on the last year's November 21 as well. So overall, there is a conviction that in spite of the home loan interest rate increase, the buyers are still not disheartened. So the transaction volumes are going on. On the other side, your question was about price rise. Let me also tell you that the price rise we are not observing as much. And that perhaps is the wisdom that the developers have gathered over a period of time, that increasing the prices a bit too much can actually throw the affordability out of the window, and the buyer may still run away. So not increasing the price is a wise decision, and a nominal 4-5% increase, which is all right, linked to the inflationary trends, is what is being observed. So your point, whether do we see huge amount of price rise? Well, that's not happening yet.
Okay. All right, Gulam, take your point on that one. So not seeing price rise as of now in the Mumbai market. So that's good for consumers, of course, for sure. Thanks a lot for joining us and giving us your take on a variety of issues which are impacting the Mumbai real estate market. And for now, we'll step into a short break. On the other side, we'll focus on the November auto sales numbers. They are coming in and we'll get you an update on that one. Stay tuned.
Welcome back. Well, auto sale numbers have been trickling in for the month of November. Manglam is here with us with the details on the companies which have released numbers till now. Manglam.
Well, as far as the auto sales for November are concerned, we do have a few of them. Bajaj Auto, to start with, was rather weak because total sales came in at just above 3 lakh units. The street was working with a number of 3.4 lakh units. Total sales for, domestic sales were actually down by 19%, whereas the export sales were down 30%, and that was where the weakness was. The total sales were actually down 19%, domestic sales down 4%, and exports were down 30-odd%. Escorts, on the other hand, was actually a decent set because the total tractor sales were higher by about 12-odd%, and this at a time where the street was expecting, flattish sort of growth or some sort of moderation for tractor sales. Domestic tractor sales for Escorts grew by around 13.5-odd%. Ashok Leyland as well was rather good. In fact, the total sales came in above that 14,500 units mark. The street was working with a good 1,000 units less. 13,600 was what the CNBC-TV18 poll was. Total sales grew by around 39% year-on-year, and that was led by medium and heavy commercial vehicles, which grew 69%, whereas domestic sales, total domestic sales, grew by about 46%. Finally, that brings us to VST tillers. Now, on an optical basis, it may be weak because you're expecting a decline of almost 4.5%, or you're witnessing a 4.5 to 5% decline in the total sales, but that is led by power tillers, which is down by 8.2%. And the tractor business is actually up 10% for them. So tractors are a high margin business for them, and that's grown 10%. That is something which is positive.
Okay, all right. So that's a wrap of all that has happened with respect to auto sales for the month of November. In fact, we spoke to Rakesh Sharma, Executive Director at Bajaj Auto today. Let's listen into what he had to say on their November performance.
Diwali moved by 10 days, and last year it was in, I think, first week of November, and this time it was in last week of October, and you have the month end in the middle. So the decline is entirely explained by the base effect. So therefore, it's always better to look at this period as a combination of October and November. The upper half in the industry, which is the 125cc plus segment, has grown at twice that rate, which is almost about 35%, showing that the higher end customer is coming back rapidly into the consumption cycle. And in this segment, the performance of Bajaj Auto has been almost twice that of the industry.
All right, time for a break now. On the other side, our commodity segment. Manisha.
Back joining us on the show now is Peter McQuire. He's CEO, Exim Australia. Peter, hi, good to have you. And what a month November has been. I mean, barring everything, barring only crude, everything else actually saw a very strong gain in the month of November. But let's start with crude, because now we do understand that 4th of December meeting is happening virtual. They're not meeting in person. Does that undermine the importance of the whole event?
I don't necessarily, good afternoon, Manisha. I don't necessarily think it undermines it in any fashion or form, because we've been used to those sort of conditions over the last couple of years, unfortunately, with the COVID crises. So, yes, it's just a matter of how we do business. But I'm waiting to see what they think as far as mood and sentiment, and that will be read very quickly from the market. We've been strongly bid up, as we know, over the last session or so. And there seems to be a little bit of positive tone coming across from China. And, of course, equities really pushing hard.
So, after the 3% gain that we've seen yesterday, are you looking at higher highs coming back in case of crude? Because we've posted 7 to 9% of a decline for the month of November. December promises to be eventful. I mean, there's just so much happening, at least in the first half, before we head for the holidays.
Well, exactly. I mean, even this week alone, you've got tomorrow with NFP, we've got the Russia situation, what's going on there. Yeah, so I think that I won't be surprised for it to edge up a couple of dollars. It was pretty heavily smacked down, as you know, over November, and maybe we're just going to find some of those, a bit of a retracement, maybe a couple more bucks. And traders are rubbing their hands with glee because it's been exciting. And you've also got that continued weakness as far as US dollar, Manisha. You've got the yen, don't forget that. We're nearly at 3-month highs at about a 136 handle. You were at 150 only the other week.
Oh, well, yes. Peter, what's your sense on the natural gas? Because there is cold weather forecast coming in now. Are you looking at support continuing here? Because the last week, the last day, the month of November, all has been in positive.
Absolutely. Well, yes, I won't be surprised for NYMEX gas to, edge up higher from here. It'd be not unusual, Manisha, considering that cold weather really starts to bite in that northeast of US and, of course, across Eurozone. So, yeah, I'm thinking that I wouldn't be surprised for it to edge up higher, crude prices up a bit, and, another market that's very dynamic to trade is, of course, the nat gas market.
All right. So how do you see the month of December, at least? How do you see the year ending for the crude prices to begin with?
Well, Manisha, I think it's going to be exciting. I'll tell you what. That's just so wonderful, because we've had a dynamic 11 months, so I don't think it's going to disappoint. Is Santa Claus going to be there for a rally across equities? And what's happening with Jay Powell? He seems to be backing off. And, of course, the COVID situation of backing down a little bit with lockdowns for across China and the whole basin. So, yeah, a positive tone, increased move to the upside for crude, a couple of bucks. And, let's just see where we are by middle of the month, because there's a lot of traffic to get underway in the next 2 weeks, as you mentioned.
Oh, absolutely. How are you also looking at the metal prices? Because very strong gains there overnight for the month of November. I mean, gold and silver have put an outperformance. So have other metals like steel, iron ore up 25%, even copper, nickel, aluminum, zinc, almost everything up nearly 8 to 9%.
Exactly. Well, iron ore has been outstanding, but I'll tell you what, everyone's keeping their eye very much on gold's little brother, because silver's been dynamic, and, it's offering plenty of returns, plenty of, I think, opportunity even in the months ahead. And at $22 an ounce, it's probably relatively cheap. What is it, $22.30? So I think there's more upside for the silver market. And as that US dollar comes under continued pressure, I'm sure that some of those big economies are going to ramp up rates even harder, be the likes of UK and Eurozone, Manisha. So they're playing catch up against the Fed.
So among the metals, do you think iron ore and steel, rather silver, perhaps stand out the most?
I think so. I wouldn't be surprised for silver to go up another leg up. And as far as ores, iron ore's been, quite strong. So, from a retail trade perspective, silver seems to be a lot easier to trade, and it's dynamic. It's got there's a great storyline attached to it, and it's playing off its big brother, and the big brother's doing pretty well. I mean, at 1780, you might have an 1800 to handle by in the next session or two.
All right, so 1800 could be coming in for gold in the next couple of sessions itself. Silver can continue to outperform, buying in gold and rather energy sector as well. So I think everything in commodities seems to be doing well. So as of now, the direction clearly is on the buy side. Peter, as always, thank you so much for joining us and giving us a sense on commodities. With that, it's time up on Halftime Report. After the break, Business Lunch takes all the action forward.